Hello everyone and welcome back to my channel. Today I will be sharing with you guys my favorite dividend stocks for September 2020. Here are the timestamps for the video. We start with Manulife, ticker MFC on the Toronto and the New York Stock Exchange, the insurance company. Here in Canada we have three big insurance companies, Manulife, Sun Life, and Great-West Life. Manulife is currently trading about 23% down from its February highs pre-crash. Starting with their dividend, Manulife is a dividend aristocrat, having increased their dividend for 6 consecutive years. It yields a 5.6% dividend at current prices, with a 54% payout ratio. It trades at a P/E ratio of 10.19 and a price-to-book of 0.8. The company operates in various different countries. More importantly, they have been expanding into Asia. Manulife has been increasing their operations in Asia to the point where Asia produces double the income that Canada produces. This to me is very important, as Asia is an emerging market with the economy that is still developing, and Manulife is very well positioned to take a large share of the insurance market in Asia. Overall, Manulife is a very strong dividend-paying stock with great opportunities to appreciate in value as well. With that, here's my position. I own 16 shares at a cost basis of $18.57, which yields me an annual dividend of $18. Our next stock that we will look at is ATCO, ticker ACO.X on the Toronto Stock Exchange. ATCO is a big holding company that has operations in various sectors, starting with Structures and Logistics Business Unit, which provides logistics services. They have a controlling stake in Canadian Utilities. And for those of you that don't know, Canadian Utilities is the #1 Canadian dividend aristocrat, having raised their dividend for 48 consecutive years. This in itself showcases the reliability and consistency of this company. In fact, in just 2 years, Canadian Utilities will become the first Canadian dividend king. ATCO has a 40% ownership of Neltume Ports, which operates 16 ports in Chile, Uruguay, Argentina, and Brazil. Finally, ATCO owns and operates ATCO Corporate, which operates in commercial real estate. Before I show you guys some numbers, I'm going to skim through Canadian Utilities, which operates in electricity, generation and distribution, natural gas distribution and transmission, storage and industrial water, and retail energy. All of these sectors are extremely consistent and, most important, absolutely essential, meaning that there is always demand for them. I won't go in depth for the financials of ATCO, as I don't want to drag out this video. I have considered making a video dedicated to this company because I think it is one of the most underappreciated stable dividend payers in Canada. So if you guys want me to do that, please leave that in the comments down below. I will now go through some highlights. This quarter, their Structures and Logistics department saw massive growths as they tripled their earnings due to contracts for design installations and construction of 2 hospitals in Mexico, contracts to construct workforce lodging for Trans Mountain expansion projects in BC, and construction of 2 apartment buildings in BC and 43 modular classrooms in Melbourne. All of these showcasing extreme demand and growth for this section of the company. Their ports income was cut in half due to COVID-19 affecting trading volumes in the area and some unprecedented equipment maintenance, which is only a temporary problem. Canadian Utilities also saw a quarter-over-quarter decline in earnings. This decline was mainly due to the sale of 2 businesses in this same quarter in 2019 that came with some one-time profits, which showcases the company lowering their earnings quarter-over-quarter. ATCO's P/E ratio sits at a 12.24 compared to the industry average of 28.23. It is sitting at a price-to-book ratio of 1.13 compared with the industry average of 1.3. It is well positioned to weather off economic uncertainty in the near future, sitting at a 2.29 current ratio. With this, here's my position. I hold 10 shares at a cost basis of $39.06, which yields me an annual dividend of $17.40. The last company we will look at is Bank of Nova Scotia, ticker BNS on the Toronto and the New York Stock Exchange. It is trading at a 23.9% discount from pre-crash prices. It currently trades at a 10.12 PE ratio, yielding a 6.26% dividend. Compared to the other big banks like RBC, TD, and CIBC, BNS is trading at a much cheaper price due to its exposure to the Latin American countries, because of COVID-19 is hitting these countries very hard. Since the bank just released earnings, I will highlight some important aspects from their Q3 report. Starting with some very good news. Euromoney awarded Scotiabank with Chile's best bank and Latin America's best bank transformation. This came from their good management of the new acquisition bank BBVA in Chile. I showed you this just to showcase Scotiabank as a bank that is aggressively trying to expand and acquire share in a developing market, which if done very properly would immensely reward shareholders. The company is sitting at a strong 11.3 CET1 ratio, which the bank has used to reassure investors that the dividend is safe. Looking at their income statement, we can see that this quarter, the company's net revenue fell a little because of a slight decrease in both interest and non-interest income. In net income though, this quarter the company reported $46 million in net income than in the last quarter, regardless of higher provisions for credit losses. This came thanks to lower non-interest expenses and lower tax payments. One last point to reassure you guys of the dividend safety of BNS stock is their very comfortable 64% payout ratio. Given the economic hardships that we are going through, this ratio should reassure us that the dividend is safe. With that, here's my position. I own 13 shares at an average cost basis of $54.94, which pays me an annual dividend of $46.08. This is where we end the video. Thank you all very much for watching. Please remember to show your support through subscribing, liking, and commenting. I will see you in the next video.